BlackRock decided not to get the approval of the SEC for the Solano ETFs. They have decided not to list the Solano ETFs because they think that there is not enough market demand for Solano ETFs. And Solano is only 3% of the crypto markets. I hope you understand. Only 3% of the crypto markets. Unlike Ethereum and Bitcoin, which does have a big market, means it's the major portion of the crypto market. It accounts for 97% of the entire crypto market. So BlackRock doesn't feel that Solano is up to the mark because it doesn't have the demand currently. It might change in the future. I think Solano will outperform Ethereum. Maybe not. But currently it's not the case. That's why BlackRock decided not to get the ETFs approved, Solano ETFs approved. But VanEck decided to get it listed because VanEck wants to push the boundaries, right? They want to get, I don't know, Ripple ETFs approved, Cardano ETFs approved. So they think there is some hope for Solano and there is demand for Solano. But I don't know what's their underlying reason for it. In the future, there will be huge demand. They might be looking at the future. But currently, there is no demand for Solano. For me, I personally don't think Solano is a great investment because its trading activities or what's most traded on Solano is basically meme coins. That's how they get this traction. And meme coins are not sustainable, not even in the short term. It's a fad, not a fashion or even a style. I believe Solano ETFs are not going to perform well compared to Ethereum and Bitcoin ETFs. Even if you look at Ethereum ETFs, around $2 billion of liquidity has gone out of the Grayscale Ethereum fund, ETF fund. So you have to understand that there was a net outflow from the Grayscale ETF fund. So that fund is not performing well. But I have to say that Solano ETFs will perform very poorly. The primary reason is that there is no real activity going on within the Solano ecosystem because it's mostly bots. The volume that you see within the Solano taxes are primarily driven by bots. That's why. I will show you the stats. Look at the stats. Bots suspected of pushing Solano over Ethereum research. Solana overtakes Ethereum on numerous metrics, but research finds its performance to be inorganic. Solana has overtaken Ethereum on various metrics this week, but a recent research article on X claims that most of this activity is conducted by bots. So there is an evidence that Solano is driven by bots. At least its DEXs, at least the activities with the DEXs are driven by bots. Most of it, like 90% of it is driven by bots. So look at it. So Solana recorded an average of 270 transactions per user on July 26th across 1.3 million active addresses. That means there are 1.3 million active addresses. That means there are addresses you use when you create a wallet. But you use that wallet. It's active. There is funds moving around. But the problem here is that there are 270 transactions per user. That's a lot of transactions when you are counting for a user. Think about it. 270 transactions per user. Like a single user can transact 217 times. And it's across 1.7 billion active addresses. This is basically a bot. It's a bot. That's why it can do 270 transactions. Can you do 270 transactions across 1.7 million active addresses? That means there are bots that are acting as a user. That means it is a phony who transact at a rapid pace because Solana has cheap transaction and it's very scalable. And there are not many people in the Solana ecosystem. There is only an inflated amount that is shown to you or are manipulated for various reasons by various parties. Anyways, on average, there are 270 transactions per user. And these transactions are done across 1.7 million active addresses. When you compare it with Ethereum only records less than 3 transactions per user across 376,300 active users. That means 3 transactions or less than 3 transactions per users. That means less than 3 transactions per user across 376,300 active users. That means the amount of people or the users active on Ethereum is 376,300, but the transaction is realistic, legitimate because there is only 3 transactions per user. Like I transact ETH to some wallet and I transact some ETH to other wallet or other tokens to other wallets. That's all. Only 3 transactions per user. But that's not the case for Solano. Solano is hyperinflating their numbers a lot, their metrics. What clear is that there's a massive discrepancy combined with the high amount of MEV and wash trading. Flip Research told Cointelegraph. High amount of MEV and wash trading. This basically means there's a lot of trade that's happening within Solano network that isn't legitimate. That's just coding. And that's bot only, not human based, not users, legitimate users. And wash trading. Wash trading typically means it's not an actual trade, but it's a trade just to make sure that there is a trade. It's a fictitious trade. That means it's done to show that the ecosystem or the network has huge activity going on within it or huge volume going on. You have to understand that Solana has low cost of transaction. So both can transfer tokens at a rapid pace and giving an illusion of high volume. That's what's happening here. According to Blockwork Research, Solana's 25 million in total fees in the week of July 22 surpassed Ethereum's total fees of $21 million. Solana also clocked the highest 30-day decentralized exchange DEX volume in the industry. Look at this, Solana's $25 million in total fees in the week of July. They are risking their network's integrity. That means they are paying off $25 million in fees just to give an image that the network has high volume and high activity. You understand? That means they are using these bots to make it appear that there is high activity. So people will think that there is high activity in this network, while in actuality there is none. You understand? In 7 days to July, Radiance led Solana trading, DEX trading volume with $6 billion. Orca and Phoenix trailed with $3 billion and $1.144 respectively. However, a big chunk of Solana transaction is believed to be driven by inorganic trading activities and bots, as suggested by Flip Research analysis of Radium and liquidity pools. That means a huge chunk of Solana transaction is driven by bots. That's what they are saying. Countless liquidity pools on Radium have little to no liquidity but generate unreal trading volumes. For example, Flow Soul pool held just $3 in liquidity but had over $5 million in 24-hour trading volumes. You understand? That means these two tokens only had $3 in liquidity. That means that's the amount of money that's in the liquidity pool. But the trading volume is so huge that it's disproportionate to the amount that's been staked. So think about this. It's just bots committing back and forth transactions to give an illusion that there is activity within that DEX. But in actuality, there is none. Flip Research analysis of these low liquid pools suggests that they are drug pool projects, a common type of exit scam that has been rising in popularity among the meme coin scammers. You have to understand that Solano is driven by the meme coin trading frenzy. That means it is a platform that got huge acceptance just because some random meme coins got accepted by the public. Not the public, not everyone. A selective few of people who had lots of money to play around and based it on bullshit coins. You understood that? That's what's happening inside Solana. Solana is very basic. Like I have said this like months before that Solana has lots of issues, even auditing issues. But when people said that, they never cared. I'm okay. But the thing is, As of now, Solano has a board issue. If you take out all the boards in Solano, there is no one in Solano. The Solano is a deserted network. Nobody there. But Ethereum has active users. But Ethereum has issues too. Like in the early video, I said that Ethereum is inflating because of the L2s. Means everyone went to layer 2 blockchains and they are transacting over there. And nobody is transacting within the Ethereum ecosystem. That means the main chain. So what's happening here is that Ethereum needs demand to support its network. Means to maintain its network. It needs at least 18 GUI or so. But everyone is leaving Ethereum to layer 2s where everything is less costly compared to the main chain. One of the projects analyzed by Flip Research had $10.8 million of volume from $48 in liquidity, with 2,845 unique wallets was trading the token to generate $28,000 in fees. That's interesting because think about it. There are unique wallets of 2,845. They generate fees of $28,000. That means there is a back and forth transaction to 2,845 unique wallets. These transactions are just to give an impression that there is a high volume within the network or within this DEX, and it generates a high, and it also gets huge fees in transaction. And these transactions are just artificially generated. Means by using bots. So it gives an impression that it's generating money for upkeeping the network. The wallet involves appeared to be bots conducting thousands of transactions, resulting in fake volumes before rug pulling investors. Yeah, basically people will get rug pulled. Naturally, people will get rug pulled. That's the nature of these schemes. I thought you believed in fake volumes. Everyone wants to believe. That's why they want to believe that there is some kind of activity going on within the network. If you look at Web 2.0, there are lots of bot activity there also. If you look at Twitter, Facebook, everyone, like 50 to 60% is bot. If you look at Twitter, it's 80-85%. Facebook, maybe 60 to 70%. Everywhere there is bot. They want to give an impression that there is huge activity and there are huge number of people using that social media applications. And it applies to every social media application or whatnot. It applies to every form of applications. It's a business strategy, business statics. The researchers added that Radiant's standard liquidity pool had over 50 rug projects that generated $200 million in trading volumes and $500,000 in fees in 24 hours. That's interesting actually. They may manage to make $500,000 in fees in 24 hours. This means that when a legitimate user stake their tokens or cash in a liquidity pool, what happens here is that they take these tokens and they use these tokens to trade among wallets. So what happens is that this gives an image of highly inflated volume, or this gives an image that the network has huge volume. That's $200 million of volume. And from this, they could also get transaction fees. For each transaction, there's a small portion that is given to the network for the sustenance of the network. So what happens is that they are using the money of legitimate users for the sake of giving an impression that there is a huge volume happening in the network, and also taking the fees for the transaction that's being given by the user to generate transaction fees. That's accounted for $500,000, and in just 24 hours they managed to make this. Solana is the established meme coin casino which is attracting volume from some least price sensitive, high risk tolerance users. Flip Research told. That means there are people who are willing to give huge sum, not small amounts for trading, but a better transaction cost or better gas fee or better amount to the sustenance of the network or for other activities that these transaction fees are captured. But what you have to understand is that there is an illegal activity going on within the network, like a seriously illegal activity, like all 50 rug projects, right, generate $200 million in trading volumes. And you have to understand, read this, which is attracting volume from some least price sensitive, high risk tolerance sector. That means they don't care about their transaction fee. They doesn't care about their transaction fee. They are willing to give whatever they are willing to give. I hope you understand. This leaves them open to exploitation from a number of factors such as MBV bots, serial scammers, and insiders. Yeah, you get scammed by insiders because you don't know where your money is going, and if it's in a liquidity pool, you don't know, you can trust that particular liquidity pool. And insiders, I don't know, it's someone who knows what's going to happen next because they know informations about the developers and how the developers will do in the next moment. So there are lots of scamming stuff going behind the scenes. Solana board volume has been around all year. Boards can operate at a restless pace that humans can't, and their automated trades have been pumping volumes on Solana all year. Yeah, that's true. In February, the network monthly stable coin volume surpassed $643 billion. Most of the stable coin volume came from USD coins. Transaction of Phoenix, a Solana DEX. In February, the network's monthly stablecoin volume surpassed $643 billion. Yeah, most of the stablecoin volume came from USDC coin. Transaction of Phoenix. This hyperinflated volume of $643 billion is basically board activity. Nobody is going to reach this level of volume because nobody is going to generate these kinds of volumes if it were real. Means it must be bot activity. So, Coin Telegraph magazine February analysis of blockchain transaction on Phoenix transaction found that the majority of the volume came from bots. Yeah, these automated traders have been a double-edged sword for Solana as their activities have resulted in favorable metrics at the expense of network health. That's true because they are hyperinflating or they are giving an impression that their network is healthy. But you have to understand they are also burning fees to do these tasks to hyperinflate the network. And you have to understand these fees are needed for the sustenance of Solana itself. And if they can't generate real users, Solana will go bankrupt. That means it would burn cash without real activity coming into the network. And this would lead to implosion of the Solana project. And they need real money. Means you can't burn cash simply like that because users need to bring in the cash. New users have to come and put in the cash. And if they burn whatever cash it is inside the network, then what will happen is that there won't be cash in the future because most of the cash is burned for hyperinflating or giving an impression that there is a volume in the network when there is none. By April 2024, developers responded to congestion issued by releasing a mainnet update. Though Flip research findings suggest that board activity is still rampant in the network. Developers responded to congestions issued by there's a lot of outage recently for the Solana network. That I think that's because of these issues, these board issue. Because ordinary users can't get a transaction done. That means there are a lot of value that's been taken from the user. And this is a huge issue. If these kinds of behavior is permitted for long, it won't be the users who will take the damage. It will be the Solana project or people behind the Solana project. Anyway, lots of rug pulling happening within the network and there is no real activity going on the network, and most of the best transactions or most of the best DEXs are primarily driven by bots and scammers and other kind of people who doesn't care about you. Now we can look at the Bitcoin price and why it fell below $63,000. Right now it's $16,000 and everyone is fearing that there is a recession looming. Like the metrics that we have used is the employment rate in the US. The US employment rate unexpectedly jumped to 4.3% from 4.1% in July, triggering a sharp drop in risk assets on Friday. I think they have made a mistake here because the US employment rate unexpectedly jumped to 4.3 means it's better than now. That means it is better now than the month before. They mean that it's unemployment rate, I think so. Anyway, I understood the meaning. That's why there was a sharp decline in risk assets like Bitcoin and Ethereum. This caused the Bitcoin price to plunge briefly below $63,000 as US recession fears rose, after falling to $62,000, $62,300. The Bitcoin price recovered to $63,000 as US equity markets reeled. Basically, share market also fell. The weaker than expected headline US number showed only 114,000 jobs added to the economy in July, falling short of the projected 176,000. Basically, they expected 176,000, but they only got 140,000 jobs. That's reported jobs. We don't know what's not reported because only the reported jobs are known. The US economy adds 140,000 jobs in July, below expectation of 176,000. Then the unemployment rate rose to 4.3%. Yeah, that's what I'm saying. The unemployment rate rose to 4.3, above expectation 4. But they have written is the US employment rate is unexpectedly jumped to 4.8. It's unemployment rate jump. It should be written like that. Sorry, bro. However, the unexpected rise in unemployment stole the show, prompting concerns of a potential recession. Economist Holster Shipitz highlighted the significance of this jump, noting that some pool recession indicator rose to 0.53 from 0.43. This surge indicates a heightened probability of a looming recession. Yeah, that means a recession is near and nobody knows really, but we will go along with the data. But there is a drop in employment rate. That's true, but this is a good news. Think about it. This is a good news. Because of this, Bitcoin plummeted. There is an increase in unemployment rate. Good news. Bitcoin plummeted. You have to understand this is a good news because they are going to cut interest rates soon. And it said that from the data from CME, it says that greater than 70% likelihood of the Fed implementing a 50 BPS interest rate cut in September. 50 BPS interest rate. That's huge cut that's coming. That means they are going to pull the fund from savings account and put it back to risky assets. And there will be more activity within the economy. But that's not what's going to happen. In the end, there will be a huge recession, but there will be a huge boom too before the bust. We are waiting for the boom, and just before the bust, we should exit the market. Think like that. When the bust comes, we just sit because we have sold our assets by then. Just before the bust, we have sold everything. Why are Fed rate cut bets not positive for the Bitcoin price? The recent market activity begs the question, why haven't rising expectation for rate cuts translated into positive momentum for the Bitcoin price? Typically, such expectations are viewed as a positive catalyst for Bitcoin. However, the current situation deviates from this norm. The underlying reason for the Fed's potential cut holds significant weight. Rate cuts aimed at maintaining a balanced, non-recessionary economy would likely benefit risk asset like Bitcoin. Conversely, if overly tight financial condition and looming recession force the Fed into rushed rate cuts, this presents a less favorable scenario. This missteps from the Fed has potential to harm the economy. Consider the impact of the Fed action in 2000 and 2022, allowing the economy to overheat in 2021, led to forced sharp interest rate hikes in 2022, ultimately harming Bitcoin. Similarly, maintaining excessive high interest rates in 2024 potentially leading to rushed rate cuts could also negatively impact Bitcoin. They are saying that Bitcoin is not going to go up because I don't know, because these economists don't have a specific reason, because there is overly tight financial conditions and looming recessions. That's why they're saying that Fed's rushed rate cuts will be less favorable for Bitcoin or Ethereum. That's what they're saying. So what's next for Bitcoin? Until recently, the prevailing market assumption was that Fed would achieve a soft landing, controlling inflation without triggering a recession. This assumption previously allowed rising expectation for Fed to cuts to bolster risk assets, including Bitcoin. However, recent data challenges have made the outlook more complex, potentially increasing downside risk for Bitcoin's price. Bitcoin currently faces additional challenge. For example, US Vice President Kamala Harris implied probability of winning the November election has increased. Oh, this isn't looking good. But you have to understand this is only accounting for that moment. Because if Trump wins, it's pro crypto. But if Kamala Harris wins, it's anti-crypto. Means US will take actions that are against crypto. I don't know. Whoever wins, don't care actually. But if Trump wins, you will make lots of money. But there will be other issues too. We have to face that issues. There will be consequences. Intended or unintended, doesn't matter. But we will be making money. But if Kamala wins, I don't know what will happen to the US. And I think it will be the same as before. Nothing impressive. It's the same old thing, same old-fashioned US, failing, crumbling before China or other countries. Nothing impressive going on with the US. And now it's really tough because everyone is moving on with their agenda, right? So I don't think US has any advantage here. But I believe in crypto because they are going to make money over here. Crypto is going to make us money, rich. Bitcoin currently faces additional challenges. For example, US Vice President Kamal has implied the popular winning the November presidential has increased. Crypto market appears to interpret this as negative sign given former president perceived pro-crypto stance to the looming supply overhang from the US government and empty cost credit as further should support the 50ish and 200 moving average 60,000 and 61,000 respectively. Further decline below is possible potentially due to retest of recent lows around 53,000. Lower interest politics to power price rebound. While US recession would initially hinder Bitcoin's price, assuming its demise would be premature. Although recession fear may initially pressure Bitcoin, lower interest rates could ultimately fuel a significant recovery. Consider 2020 when global central banks slashed interest rate to zero to support economy ravaged by COVID-19 lockdowns. Despite an initial decline, the Bitcoin price pounded a substantial comeback in late 20 and into 2021. A sharp decrease in Fed interest rate could inject liquidity into the market, potentially fueling a robust price rebound. Other factors could contribute to a potential rebound. This is what I said before. These economists don't know what they are talking about. Here they said that if they cut interest rate, like big interest rate, like huge interest rates, there will be unfavorable factors for Bitcoin or other cryptocurrencies. Because there is recession looming and there are other overly tight financial conditions. And this rushed rate cuts would be unfavorable for Bitcoins and other cryptocurrencies. But here it's not like that. Lower interest rate means a rushed cut or rushed interest cut will help Bitcoin. That it will be a boon to Bitcoin. That means Bitcoin will significantly recover. So that's what I say, don't believe in economists. They could say one thing and at the same time they could say something else. While former President Trump is generally viewed as pro-crypto for more crypto-friendly policies within the party, such as a potential shift in the political climate regarding cryptocurrencies. Halving significance. Also, the consider the impact of Bitcoin's recent halving. Post-halving rally has even started. Those who are selling Bitcoin now will regret. Okay. Historically, Bitcoin has displayed the tendency for substantial rallies, often reaching new highs, approximately 6 months after each halving event. The next 6 months mark falls in October. That means by October, the Bitcoin is going to reach an all-time high. We are going to make lots of money. And there's another good news. The next news is the Indian budget of 2024 and why this budget favored the crypto F&O investors, which basically means futures and options investors. Futures and options investors doesn't have to pay STT or TDS. And they don't have to pay the 30% tax on the crypto profits. STT means securities transaction tax that you have to pay on stock exchanges. But you don't have to pay TDS also, tax deducted at source that you have to pay for crypto transactions. And there is no 30% tax, means when you make a profit, you have to give 30% of it to the government. There is none of that. So this will help the crypto investors a lot because they can play futures and options and still make lots of money, but it's gambling actually. Futures and options are highly risky. You have to know the economy and how the economy will turn out to be, and it's risky, and that's why they didn't put any tax bracket on it. So what I am saying is that India is also becoming pro-crypto in a sense, but for normal crypto investors, it's not easy because when you sell crypto at a profit, you have to pay that 30% tax. That's on your profit. So what's the issue is that I think India has to become much more progressive in this case and let more people come into the crypto industry. This will be a boon to India only. I don't know if it's a boon to India because these kinds of technology questions the integrity of the nation, means questions or challenges the nation. But anyway, I am happy for crypto investors because I am a crypto investor, so I am happy. Actually, we can make lots of money by investing in the products that we love and supporting it. For me, this news is not a big deal, but it is a deal for those who play futures and options in stock exchanges or those people who have this flair for this type of investments. But I hope you love this video. If you find this news interesting, okay. But for me, it's not a great deal because I am a regular investor, crypto investor. But anyway, if you love this video, subscribe and hit the like button. If you don't. Otherwise, you can comment also. Like. That's all. Have a great day.